You say in your monthly investment outlook, which is published today on Janus.com, anybody who hasn't read it ought to go and read it as soon as we're finished here. And you say, quote, Bill, our highly levered financial system is like a truckload of nitroglycerin on a bumpy road. One mistake can set off a credit implosion where holders of stocks, high-yield bonds, and yes, subprime mortgages all run to the bank. Are you ringing the alarm bell or just putting people on notice?
Well, I think putting people on notice, calling Armageddon, ringing an alarm bell is really hard. It's easy to see the smoke. It's not necessarily easy to see the flames. And what I talked about in the investment outlook was the creation of credit, or the growth of credit, from the early 70s at $1 trillion to perhaps $65 trillion today in the U.S. We know it's grown tremendously in countries like China and Brazil and other countries. And so the growth of credit can be very dangerous if interest rates are not accommodative for it.
Is that to say, as well, there's not enough capital in the banking system to absorb that kind of shock?
Yeah, I think so. And there's not enough capital, to my way of thinking, in terms of the Fed's balance sheet. They have $4 trillion worth of U.S. Treasuries. We have $65 trillion worth of credit. What does that imply? It implies perhaps a 6 to 7% equity, in the credit system. And is that enough, compared to a bank which requires 9 or 10 or 11% equity? I think it's at the margin. And so what does that mean? What does it mean in the markets? It means that the Fed, to my way of thinking, can never practically delever its balance sheet. They can't sell their treasuries because that would delever the system in the process.
What about the banking system itself, the commercial banking system? Jamie Dimon, the JP Morgan CEO, said today in an interview with Bloomberg Television that he hopes the Trump administration will give American banks relief on capital standards. Based on what you've just said, is that such a good idea?
Well, I respect Jamie Dimon. He's done a great job. But, to be asking for relief in terms of the amount of equity a bank is supposed to hold after only, 6 or 7 years following a crisis that created the Great Recession and perhaps the potential for another Great Depression, I think that is a little bit much. Let's get some equity into the banks. Let's keep it there. Let's make it grow, because that, more than anything, is the regulatory measure which makes banks safe.